Hello everyone, welcome back to the Step-by-Step Investing channel. As the new year of 2026 dawns, I know many of you are feeling heavy-hearted due to the flood of overwhelming news, from stock markets fluctuating wildly on war updates to the unpredictable international landscape. I imagine many of you are looking at the current market with fear. Every morning when I check the news, I too feel a visceral sense of crisis, that 2026 is going to be truly different. However, we aren't in this game for just a day or two. At times like this, we need to catch our breath and look past the surface-level panic to coolly observe the massive currents of money flowing underneath. Today, I haven't prepared a simple which stock will go up tomorrow video. Instead, I want to walk you through a deep analysis, the kind shared only among a tiny minority of experts in Yoido, about how the world is being reshaped and what opportunities we must seize within these changes. It might be a bit of a long story, but if you stay with me to the end, you will experience that vague fear turning into confident opportunity. Let's get started. First, we need to address the event that shocked the world on January 3rd, the arrest of Venezuelan President Maduro by U.S. Special Forces. The media portrayed it simply as the fall of a dictator or the arrest of a drug lord, but from an investor's perspective, this carries a much heavier weight. To understand this, you need to grasp the concept of kinetic economics, economics accompanied by physical force. The era of solving problems through diplomacy or international law is over. We are now in an era where military power and economic sanctions are fused. Why did the US go so far as to use special forces to strike Venezuela? Was it just out of a sense of justice? No. The core issue is energy control. Venezuela holds the world's largest oil reserves. It was a key partner supplying oil to China, bypassing U.S. sanctions. For China, Venezuela was a vital energy lifeline. The U.S. has now physically severed this link. This deals a fatal blow to China's energy security while signaling the U.S.'s powerful resolve not to tolerate influence from external forces like China or Russia in the Western Hemisphere. Energy is no longer just a commodity. It is a core security asset. The US has sent a signal that it will use force to control energy outside of its supply chain. We see similar trends in Eurasia. Have you heard of the Trump route? It refers to the Zangezur corridor in southern Armenia, where the US has secured lease rights. If you look at the map, the location is incredible. It's a route that can send Caspian Sea energy directly to Europe without passing through Russia or Iran. As a result, Russia has lost influence in the region, and Iran faces a situation where its northern border is blocked, leaving it geopolitically isolated. Why am I talking so long about geopolitics? Because you can no longer explain anything in investing without factoring in geopolitical risk. The US seizing energy choke points means the power of the dollar strengthens, which is a variable that completely changes the landscape of the asset market. Economically, 2026 is set to be a rugged year. The current effective U.S. tariff rate has surpassed 11%, the highest since World War II. The second Trump administration is using this massive tariff revenue to offset domestic tax cuts. Simply put, they are offloading the U.S. fiscal deficit onto their global trading partners. For corporations, this is agonizing. They are being pressured to either manufacture within the U.S. or move factories to staunch ally nations. Global supply chains now prioritize security and reliability over efficiency. However, an interesting crack is forming here. Look at the recent moves by Canada. Canadian Prime Minister Mark Carney recently shook hands with China. While the US is frantic about blocking Chinese EVs, Canada has lowered tariff barriers in exchange for opening up agricultural export routes. What does this mean? There are no permanent alliances. We have entered an era of each country for itself, where even allies will defy the US and join hands with adversaries if it serves their national interest. In this chaotic international relationship, investors must think deeply about where to anchor themselves. The keyword I'm focusing on is Pax Silica. This refers to a new US-centric fortress built upon silicon, semiconductors, and energy. The US now defines computing power and energy as the most critical strategic resources of the 21st century. And they are pulling massive capital from the Middle East inside this fortress. You've likely heard that the UAE and Qatar have joined this coalition. This means Middle Eastern oil money is flowing into US AI infrastructure investment, not China. China and India are being thoroughly excluded. You must read this flow. Here lies a new investment opportunity I want to emphasize, the Chain Reaction Alliance. Did you know that Nvidia, Palantir, and utility companies are moving like a single team? We usually only think of Nvidia's chips when we think of AI, but running those chips requires an immense amount of electricity. The aging US power grid cannot handle it, so Nvidia, the AI brain, and Palantir, the operating system, have joined forces with power companies. Palantir's software analyzes grid data to distribute electricity most efficiently, while Nvidia operates its chips stably on top of that optimized grid. This is a structure competitors can't replicate just by copying a chip. It is a massive infrastructure complex combining energy and AI. Therefore, the first believe utility and energy companies should no longer be viewed merely as defensive or dividend stocks. They deserve to be re-rated as growth stocks essential for the AI era. Finally, I must touch upon changes in the financial market. Have you heard of the Genius Act? The name itself is significant. The core of this bill is to bring stablecoins into the center of the US financial system. Essentially, private corporate coins will be used like a digital dollar guaranteed by the US government. Through this, the US intends to seize hegemony in global digital finance. On top of this, the status of Bitcoin has completely changed. The US government has declared it will not sell seized Bitcoin but hold it as a strategic reserve asset. This is a monumental event. It is an official signal that Bitcoin is no longer a risk asset that follows the Nasdaq, but a state-level strategic asset like gold or the dollar. The more chaotic the world becomes, and the more the US weaponizes the dollar to pressure other nations, the more the value of Bitcoin, an asset impossible to control, paradoxically rises. In fact, Bitcoin reserves on exchanges are at a 3-year low. This is proof that the real whales are no longer day trading, but are burying Bitcoin deep in their vaults. Let's wrap up this long story. 2026 will be a rough and rugged year, essentially a year of barbarism. The news will pour out stories of war scares and supply chain collapses, and the stock market will swing wildly. Many of you may feel scared and want to leave the market, but if you think coolly, the answer is visible. For the US to prepare for war, rebuild industries, and seize AI supremacy, it must pour in astronomical amounts of money. Think about where that money will flow. Think about the energy infrastructure held tight by the US, the irreplaceable tech giants like Nvidia and Palantir running on that infrastructure, and Bitcoin, the asset that shines whenever currency values destabilize. I am convinced these three pillars are the key to protecting and growing our accounts in 2026. My words may not be the absolute answer, but I believe that investing by reading the flow and guarding the choke points triumphs over doing nothing out of fear. Do not be swayed by immediate fluctuations. I hope you accumulate assets step by step with a long-term view. Let's turn our gaze to Europe. We often miss the European situation while focusing on the US, China, and Venezuela, but for investors, Europe is a critical observation point. To borrow a phrase from a recent report, Russia has completely shifted its strategy beyond conventional warfare to hybrid warfare. They know tanks have limits, so they are using non-military means. Cyber attacks, spreading fake news, threatening undersea cables to shake European society from within. The goal is clear: break the unity of European nations and maximize fatigue regarding Ukraine support so they collapse internally. Why does this matter to investors? If Europe becomes unstable, the euro falls, and massive capital in Europe moves to find a safe haven. Where will it go? China? No. It goes back to the US. Europe's crisis paradoxically fuels the relative strength of the US dollar and US assets. This is another structural reason why we cannot reduce our exposure to US stocks and dollar assets. Also, look at Russia's economy. Their benchmark interest rate is hovering around 20%. Can you imagine? As the war drags on, their sovereign wealth fund is drying up, and the Trump administration's policy to lower oil prices is squeezing their energy revenue. The more cornered Putin gets, the fiercer the hybrid attacks will become, increasing market volatility. But remember, market fear has always been an excellent buying opportunity. Let's go deeper into the financial market. I mentioned the Genius Act earlier, but there is a crucial companion bill, the Clarity Act. The news barely covers it because it's complex and boring, but the players in Yoido are watching this closely. The passage of this act means Bitcoin and digital assets are fully entering the institutional financial system. Do you know the real reason giants like Goldman Sachs and JP Morgan couldn't fully enter the crypto market? It wasn't a lack of money, it was legal uncertainty. Compliance teams wouldn't sign off because regulations were unclear. If the Clarity Act passes, the security status of digital assets becomes clear and regulatory jurisdiction is sorted. In short, a legal superhighway opens for institutional investors to deploy capital. We are talking about a different dimension compared to retail investors buying small amounts. Pension funds and sovereign wealth funds allocating just 1% of their portfolios is a game changer. Wall Street is ready. The capital waiting for the starting gun is enormous. Bitcoin spot ETFs were just the beginning. From institutional custody services to derivatives, traditional finance capital will start a great migration into the digital asset market. That is why I said Bitcoin is no longer a speculative asset. The era where institutions must include it in their portfolios has arrived. Returning to energy, let's get specific about the chain reaction. It's not just about using a lot of electricity. AI data centers must run 24/365 without stopping for a single second. But renewables like solar and wind, no sun, no wind, no power. That is a fatal weakness for AI. That is why the market is refocusing on nuclear power and SMRs, or small modular reactors. Big tech isn't stupid. Microsoft and Amazon are already signing power purchase agreements with nuclear companies. They have admitted that only nuclear can provide a stable base load. Here, Palantir's role is decisive. Building new power plants and laying transmission grids takes over 10 years. We need power now. The only solution is to use AI to analyze existing grids, find wasted electricity, and maximize efficiency. Palantir acts as the operating system for this. So when you invest, don't just look at NVIDIA's stock price. You must look at the entire ecosystem: nuclear companies producing power, utility companies distributing it, and software companies controlling it. This entire value chain will be our bread and butter for the next 10 years. Finally, let's zoom out to the macro level. I've talked about war, tariffs, and energy today. But one single question cuts through it all. How will the US handle all these costs? War, building semiconductor factories, laying AI infrastructure. Will collecting 10% more in tariffs cover these astronomical costs? Absolutely not. There's only one answer: print money. Liquidity supply. We are entering an era of fiscal dominance where the government prints dollars to boost the economy and nurture industries, even if it means increasing debt. A critical investment idea emerges here. If they keep printing money, what happens to the currency's value? Long term, it must fall. We will feel this as inflation, but investors must interpret it as defense against currency devaluation. This is why I emphasize, in a world where dollars are printed recklessly, only those who hold assets with limited quantity, whether it's Bitcoin, gold, or shares of top-tier companies with monopolistic technology, can protect their purchasing power. On the surface, 2026 will look like a year of barbarism. National conflicts will deepen, tariff barriers will rise, and the market will swing daily. But behind that chaos lies a massive movement by the American empire to reshape industries and seize the financial order. Do not leave the market in fear. Rather, times like now, when others are anxious, are the real opportunities. Do not rejoice or despair over daily stock prices. Instead, divide and accumulate your assets into the three main pillars I mentioned. Sovereign assets beyond state control like Bitcoin, the AI and energy complex, which is the core of US reconstruction, and top US stocks that will serve as a haven amidst these changes. Do not aim for a quick jackpot through day trading, but invest by riding the currents of the era. I will continue to breathe with you throughout this year, delivering deep analysis and cool-headed perspective so we can ride over these massive waves of change. That is all for today. One last quick announcement. If you felt today's analysis was on a different level than the usual reading of news scraps, please hit subscribe and like. I don't ask this for my own sake. The algorithm is cold. If it judges you aren't interested, it won't show you my videos again. If you want to keep receiving information that is a step ahead of others in this brutal 2026 market, wouldn't you say that small effort is worth it? Real players seize opportunities when others tremble in fear and prepare to leave quietly when others cheer. I invite only those who wish to walk this path unshaken with me. I sincerely hope you not only survive this rough market, but emerge as true winners. I will see you in the next video with even deeper analysis. Thank you.